saying?
Yes, so last week we hosted an event with the Association of Foreign Banks. We put together a panel with Swift and another bank to really provide perspectives of how they're approaching this migration, the deadline next year, but also the challenges which have been presented by this.
Have you ever scrolled through your portfolio late at night and felt that weird mix of excitement and panic? Like you know something huge is coming, but your brain hasn't caught up yet? That's exactly what I felt after watching the video. And trust me, it's not just another pump story. There's a tension in the market right now, one that can't be measured by charts alone. It's the kind of energy you feel when billions of dollars are quietly being positioned, while the rest of the world scrolls TikTok and pretends it's business as usual.
In this whole journey of digitizing payments, creating customer experience, trying to ensure that they're giving this seamless omni-channel experience, right? Then we are seeing a massive eruption within the tech providers where more and more fintechs are coming up.
Because here's the truth. These coins, XDC, XRP, Xlm, and HBAR are standing at a crossroads. And whether they touch $50 each or not isn't just a question of hype. It's a question of timing, positioning, institutional adoption, and the global financial system slowly bending toward blockchain solutions. Let's break it down without the usual noise. On the surface, it's easy to say, there's no way these coins hit $50. Look at their current price. XRP is hovering around $1 and some cents. Xlm is about 1.3. HBAR is trading in the mid-20s of cents. XDC is barely in the single-digit range. To the average retail investor, $50 seems impossible. It feels like a moonshot that belongs in a dream or a headline on some hype site. But here's the thing, markets don't move in straight lines. They move in waves, momentum cycles, and structural shifts that nobody predicts fully. When institutional money enters, when adoption ramps, when global finance recognizes a network as viable, prices can accelerate in ways that defy traditional expectations. Remember, just a few years ago, Bitcoin at $50,000 felt insane. Ethereum at $4,000 felt impossible. Yet here we are, living through cycles where early believers were vindicated by time, patience, and positioning. And this current setup with XDC, XRP, Xlm, and HBAR has a lot of parallels. Institutional adoption is the secret engine that can push a coin from pennies to tens of dollars. XRP has been quietly partnering with banks and cross-border payment systems for years. Xlm has a history of working with financial infrastructures, especially in regions underserved by traditional banking. HBAR is moving into enterprise solutions with Hedera Hashgraph, quietly being integrated into large-scale projects. XDC is carving a niche in trade finance and institutional blockchain solutions in ways most retail investors barely notice. Institutions don't chase hype. They chase utility, liquidity, and network effect. And when they start accumulating while retail is distracted, that's when explosive price action can happen. Even if it seems far-fetched to imagine $50, remember that it's the combination of adoption, scarcity, and global integration that can make markets behave in ways logic alone doesn't predict. The macro environment matters just as much as individual adoption. Central banks experimenting with digital currencies. Global finance slowly moving toward programmable money. Payment networks exploring blockchain integration. Cross-border settlements looking for speed and efficiency. When these macro factors line up with the coins that solve real problems like XDC, XRP, Xlm, and HBAR, the price potential is exponentially magnified. And while nobody can say $50 is guaranteed, ignoring these signals would be a mistake. The market has a habit of surprising those who only look at current prices. Retail investors are tired. Many are burned out from previous cycles. Many are skeptical after failed promises. But the people positioning early, institutions, whales, forward-thinking investors are calm, calculated, and intentional. This emotional asymmetry creates opportunity. When fear dominates retail and patience dominates institutions, coins that were undervalued can surge dramatically. So while $50 may seem like a dream now, it's the kind of dream that markets have a history of turning into reality when timing, adoption, and psychology collide. And I want to be clear, this is not hype. This is about patterns, adoption, infrastructure, and timing all aligning in a way that could make the seemingly impossible suddenly feel within reach. Start with XRP. People see it hovering around $1 and think, there's no way this hits $50. But XRP has something most coins don't: real utility in cross-border payments. Banks and financial institutions have quietly been integrating Ripple solutions for years, and they are moving larger volumes than ever before. When institutions that handle billions of dollars per day begin to rely on a network, the value of that network doesn't grow linearly. It grows exponentially, and XRP is sitting at the perfect intersection of liquidity, speed, and adoption. Then there's Xlm, which is not just another coin for speculative trading. Stellar has carved a niche in connecting financial infrastructure to regions that traditional banks struggle to serve. Governments, enterprises, and even large NGOs are exploring Xlm as a backbone for digital payments, remittances, and tokenized assets. When a network starts becoming a part of the real-world financial plumbing, its potential isn't measured by daily price swings. It's measured by real-world adoption. $50 might sound crazy when Xlm is at 1.3, but if adoption accelerates globally and institutions start holding it as part of their treasury or settlement strategies, that number becomes less abstract. HBAR has quietly been moving into enterprise solutions with Hedera Hashgraph. Large-scale projects are integrating it for decentralized applications, supply chain verification, and secure data frameworks. Enterprise adoption is slow to be noticed by retail, but it is persistent and deep. When HBAR becomes part of projects that handle millions of users or billions of dollars in transactions, the network effect multiplies. And network effect is one of the most underestimated drivers of price in crypto. $50 per token might feel like a dream today, but imagine the network effect compounding over years while the public remains unaware. XDC is carving a path in trade finance and institutional blockchain solutions. This is not speculative hype. This is integration into systems that manage billions of dollars of global trade. Governments and large corporations are exploring XDC to digitize supply chains and contracts, making processes faster and more transparent. Adoption of this scale by institutions creates scarcity because while supply exists, large holders simply do not sell when the utility is real and growing. That scarcity is a primary driver for reaching higher price points, including, yes, the level of $50 per coin. Macro trends make this even more plausible. Central banks are accelerating digital currency initiatives, meaning the world is slowly embracing programmable money. Traditional finance is under pressure to modernize and compete, and blockchain networks that solve real problems like speed, cost, and compliance are exactly what they turn to. When global finance moves toward programmable assets and digital settlements, coins like XDC, XRP, Xlm, and HBAR stand in the right place at the right time. Adoption is not about speculation. It's about being useful to the people and institutions who control real money. Emotions play a big role here too. Retail investors are tired, skeptical, and cautious after years of cycles that promised the moon but delivered correction instead. They're hesitant, waiting for certainty, waiting for confirmation. But institutions and strategic investors don't wait for confirmation. They act while retail hesitates. That emotional asymmetry is a massive opportunity. When the market is quiet, calm, and full of doubt, accumulation by big players can set the stage for explosive price action. And that's exactly what we're seeing now. Liquidity behavior supports this idea. We're seeing subtle pulses in the market, movements that indicate accumulation without massive price spikes. This is the quiet before volatility. When these networks are quietly absorbed by whales, institutions, and long-term holders, the market is being primed for a sudden acceleration. And that acceleration is what could push prices toward levels that seem impossible right now. $50 each may seem like a number out of reach when watching the charts casually, but the combination of adoption, scarcity, institutional interest, and macro alignment can make it not only possible but plausible. Timing is critical. Markets reward patience, preparation, and awareness. The coins with real-world use cases tend to lag in retail hype, meaning early movers can capitalize while the crowd is distracted. XRP, Xlm, HBAR, and XDC all fit this profile. People are focused on immediate gains, NFT trends, or meme coins, while these networks quietly grow infrastructure, partnerships, and adoption. That quiet growth is invisible in the short term but explosive in the long term. When the market catches up to reality, the price moves can be swift and dramatic. Finally, perspective matters. $50 per coin is not a forecast for tomorrow. It's a potential outcome if adoption, network effect, and institutional integration continue to align over time. Crypto markets are nonlinear. They do not behave like traditional assets. Historical cycles show us that assets with real utility and strategic adoption can jump in ways that defy linear logic. That doesn't mean it's guaranteed, but it does mean that dismissing the possibility outright is a mistake. The market is already setting the stage. The next step is execution. So the question isn't just whether XDC, XRP, XLM, and HBAR can reach $50 each. The real question is whether you are paying attention while the groundwork is being laid. Are you watching the subtle signs, the accumulation, the adoption? Are you aware of the institutions quietly taking positions while retail hesitates? Are you recognizing the macro forces that favor blockchain networks solving real-world problems? Because those who understand these signals are the ones who position themselves for outcomes that seem impossible to everyone else. The market will not wait for approval. It will not slow down to give anyone time. When the next phase hits, it will move fast, hard, and with intention. Those who are prepared will navigate it. Those who are not will be caught reacting. $50 per coin may seem like a dream today, but it is the dream that becomes reality for those who understand utility, adoption, scarcity, and timing. It is not a matter of luck. It is a matter of awareness. In short, XDC, XRP, XLM, and HBAR have the foundation, the adoption, the macro tailwinds, and the emotional asymmetry to make $50 per coin conceivable over time. It's not guaranteed, it's not overnight, and it will not happen without patience and strategic observation. But the setup is there. The signals are clear. And the question now is whether you are awake enough to notice them before the market moves in a way that leaves latecomers behind. Now that we've laid out why XDC, XRP, XLM, and HBAR could even conceivably reach $50 each, let's talk about the triggers, the forces that could actually make it happen. Because it's one thing to have adoption, utility, and macro tailwinds. It's another thing to see them collide in the market and push prices toward levels that seem impossible to most people right now. The first trigger is institutional positioning. We've mentioned it before, but it's worth diving deeper. Institutions aren't just buying randomly. They are moving strategically, quietly accumulating assets like XRP and XLM while retail is distracted by hype coins, NFTs, and social media noise. Every large transaction, every cold storage transfer, every accumulation phase by whales or hedge funds is a signal that the market is being primed for something bigger. The kind of priming that, when it hits momentum, can drive prices from 1 to 5, from 5 to 20, and yes, potentially from current levels toward $50. It doesn't happen overnight, but the groundwork is what determines the magnitude of the move when it finally arrives. Next, real-world adoption is a force that can't be ignored. XRP isn't just a speculative asset. It's a network solving real problems for banks, cross-border payments, and liquidity management. XLM is doing similar work in financial inclusion, tokenizing assets, and enabling low-cost remittances. HBAR is powering enterprise projects and decentralized applications that require speed, security, and scalability. XDC is streamlining trade finance in ways that institutions have been craving for decades. When networks solve real-world problems at scale, prices don't move incrementally, they surge. The more real transactions occur, the more demand rises, and the higher the valuation climbs. That's the kind of growth that turns a coin from a few dollars or cents to double digits. And for the strongest networks, the jump toward $50 becomes part of the conversation. The macroeconomic environment is another critical trigger. Central banks are moving faster than most people realize, testing digital currencies and exploring programmable money. Legacy financial institutions are under pressure to modernize. Global liquidity is searching for networks that can provide efficiency, security, and transparency. These macro pressures funnel interest, capital, and attention toward blockchain networks with proven capabilities. When the global financial system starts aligning with the capabilities of these coins, the demand isn't just speculative, it's structural. That is the kind of demand that can push prices aggressively higher, sometimes in ways that outpace even the most optimistic projections. Psychology and timing also play a role. Retail is exhausted. Many investors are cautious, burned out from previous cycles, and waiting for clarity before they act. This hesitation creates a vacuum for institutions and whales to accumulate without triggering early price spikes. When the quiet accumulation phase ends, and retail finally reacts, the market enters a phase of acceleration where momentum feeds on itself. This is often when exponential moves occur, moves that turn coins that felt affordable into assets whose price can reach $50 per unit over time. Timing matters because the market is non-linear. The longer the quiet accumulation and strategic positioning continue, the more explosive the eventual move can be. Liquidity behavior is another subtle but critical trigger. Markets with thin liquidity or pulsing liquidity patterns tend to react violently when momentum finally arrives. When whales and institutions have been quietly shifting supply into long-term holding, the market has less available float to absorb sudden demand. The combination of scarcity and sudden retail entry can produce price spikes that defy linear expectations. These liquidity dynamics, coupled with adoption and macro tailwinds, set the stage for the kind of price movement that could propel XDC, XRP, XLM, and HBAR toward $50. Network upgrades and technological improvements are also catalysts that often go unnoticed until they trigger market reactions. XRP's infrastructure, Stellar's expansion of partnerships, Hbar's heterogovernance network, and XDC's trade finance integrations are not just technical achievements. They are market-moving events. When these networks announce or implement upgrades that enhance speed, security, or usability, institutional confidence grows. Confidence translates to accumulation. Accumulation translates to scarcity. Scarcity translates to price appreciation. And over months or years, those technical developments can become a strong driver for reaching price levels that seem distant today. Regulatory clarity is another piece of the puzzle. Governments and financial authorities are slowly clarifying frameworks for blockchain assets. XRP has been involved in high-profile regulatory discussions that could, once resolved, unlock institutional adoption on a much larger scale. XLM, HBAR, and XDC benefit as well because clarity reduces risk and encourages participation from entities that manage billions of dollars. When regulatory uncertainty diminishes, markets tend to reward coins that are positioned to benefit from legal and institutional adoption. That reward can be significant, enough to make the $50 level feel more attainable than anyone would think when uncertainty dominates headlines. Finally, we can't ignore the psychological tipping points in retail sentiment. When accumulation, adoption, and macro alignment collide, retail enters the market aggressively, often too late for the first leg but early enough to fuel additional momentum. When retail FOMO kicks in, prices can accelerate dramatically. The combination of strategic accumulation, adoption-driven demand, macro tailwinds, technological upgrades, regulatory clarity, and retail momentum is the exact environment in which price moves to levels that most observers currently consider impossible. That's the pathway that could take XDC, XRP, XLM, and HBAR toward $50 each over time. It's important to emphasize that this isn't hype. It's a sequence of structural factors and behavioral patterns repeating in crypto history. The difference now is that these coins are positioned uniquely. XRP has real banking use cases, Stellar has cross-border and inclusion applications, HBAR has enterprise projects, and XDC is integrating with global trade finance. All of these networks benefit from global financial pressures and technological adoption. The combination is rare, and when it aligns, price behavior can surprise even the most experienced investors. So yes, reaching $50 each is not guaranteed, but dismissing it because the current price seems low ignores the forces quietly aligning behind the scenes. The accumulation, adoption, network effect, scarcity, regulatory clarity, and macro alignment all create the potential. And as we know from history, crypto markets reward the prepared, the aware, and the patient. Those who understand the triggers, the infrastructure, and the timing are the ones who position themselves for massive moves while the majority remains skeptical or distracted. The real question now isn't whether these coins can reach $50. It's whether you are paying attention. Are you noticing the accumulation, the partnerships, the adoption, the regulatory shifts, and the liquidity patterns? Are you watching the signs while retail hesitates? Are you aware of the macro forces at play? Because those who do notice are the ones who have the opportunity to benefit from the next phase, potentially pushing these coins to levels that feel impossible today but plausible when all forces align. So now you've seen the setup, the adoption, the macro tailwinds, and the triggers that could move XDC, XRP, XLM, and HBAR toward $50 each. But let's get real. Understanding all of this isn't enough unless you know how to respond. Because the market will not pause for anyone. It doesn't wait for approval, it doesn't slow down for hesitation, and it certainly doesn't care if you're not paying attention. The first thing to understand is patience. This isn't about rushing into a trade because you're afraid of missing out. It's about watching the signals, recognizing accumulation, adoption, and momentum, and then positioning yourself intentionally. $50 is not tomorrow. It's the result of months or years of adoption, institutional accumulation, and global integration. But those who prepare now, understand the flows, and align their strategy with the structural factors are the ones who stand to benefit the most. Next is awareness. Retail often gets caught chasing price instead of understanding value. But these coins are not hype coins. They solve real problems. XRP moves money faster and cheaper than banks. XLM connects underserved regions to the financial system. HBAR powers enterprise projects and secure applications. XDC digitizes global trade finance. Each of these networks is quietly embedding itself into the systems that control billions of dollars. Recognizing that value before it explodes in price is what separates latecomers from early movers. Timing is everything. The moment the market shifts, volatility will spike. Those who hesitate will react emotionally. Those who are prepared will act intentionally. By observing liquidity patterns, adoption trends, regulatory clarity, and institutional positioning, you can anticipate the market's next move rather than chase it. That awareness combined with patience is the key to navigating toward the $50 potential without getting swept up in chaos. And finally, trust yourself. The market will throw distractions, fear, and noise at you. But if you've done your research, understood the networks, and stayed aligned with long-term adoption and structural trends, you can move with confidence. Fear and hype will surround you, but clarity comes from preparation and observation, not emotion. The takeaway is simple. The path to $50 per coin is not guaranteed, but the foundation is real. Adoption, macro alignment, network effect, liquidity, and institutional interest are all converging. The opportunity exists for those who pay attention, stay patient, and act intentionally. If you want to navigate these upcoming moves and position yourself strategically, subscribe now, turn on notifications, and stay locked in with this channel. The next videos will break down step-by-step strategies for XDC, XRP, XLM, and HBAR, so when the market moves, you're not reacting, you're ahead. This is your moment to see the setup, understand the triggers, and prepare for what could be one of the most significant phases in crypto history.